And I want to go to the comments that we got from Raphael Bostic of the Fed saying that a higher peak rate is possible. And I suppose the markets have been pricing that in over the last few days, to your point about how far we've come on the yield story. So much so that actually, are we now talking about a situation where the market isn't necessarily fighting the Fed when it comes to how high rates go?
They are absolutely still fighting the Fed in terms of the Fed isn't talking about cuts next year. Maybe they're getting closer to where the Fed was in December on the terminal rate. But remember, that's still from a while ago. There's a chance that by the time we get to March and updated projections, we still could get a higher terminal rate. Now, I am in the camp that the cuts priced this year are absolutely bonkers unless you expect the US economy go into a hard recession. As I've always kind of maintained, I think a soft landing is impossible. The issue at the moment is we might not even be getting a landing this year in the US, i.e. we may not be getting any severe growth slowdown at all. The economy may stay resilient, and that means rates stay higher. That's not just no cuts, as is priced in the market, but as you imply, Anna, maybe we should be starting to talk about a slightly higher terminal rate as well, even higher than the Fed were projecting back in December.
Right, no landing. Is that a nice problem to have? I'm not sure it is if you were at the Fed, of course. Let me ask you about emerging markets then, because in amongst all of this repricing of bond markets and rethinking expectations around the Fed, we see an impact on the dollar. We see a resurgence in the dollar, and then that is knocking emerging markets.
Yeah, and I think this could get, quite bad for a few weeks. I think the much bigger picture around emerging markets stays valid, that over the last 10 years, a lot of these markets have underperformed US markets, and really they're in a much better place structurally. They don't have the debt overhangs, they have better external balances, they generally have better growth rates than many developed markets, they're ahead on the rate hiking cycle, and the world is underexposed to them. So I think the multi-year story that we're potentially at the early stages of for emerging market is valid. But I think that the much shorter term lens is that January people got very excited about emerging markets, and now they're getting rapidly cleaned out of that trade in a very short term basis.
Okay, Mark, thank you very much. Thanks for thoughts so far, of course. Remember, you can get up-to-date analysis and insight from Mark and the rest of the Markets Live team. MLIV Go is the function to use on the Bloomberg terminal.